News. Let's see. All right, there we go. So, yo, what's up for you guys watching this on the YouTube replay? Hope you're having a good day. Happy Sunday. Happy Father's Day. And check this out. The market just opened, and let's go see how the market's doing. So, the QQQ is up 0.2%. Not bad. Nvidia's up 4. This is actually good news. I thought we would actually gap down with all the geopolitical stuff. I thought the market would be going down, but hey, the market's looks like it's doing pretty decent right now. How's our Roth IRA doing on the overnight? So hey, yeah, we're up 1% in here. Wait, Main Street Capital's up 2%. That's kind of crazy. And let's go check out our risk on portfolio. So is anything down in here? So a couple stocks are down in here. Disney. Is anything up in here? So yeah, AMD's up 0.7, Reddit's up 0.7. That's good news. Robinhood's up as well. I think I see Bitcoin going up. And then I'll also go over to the Moomoo portfolio. Yo, what up, what 15? How's it going, man? Yo, Philly, what's up, dude? Luke Cannon, good to see you guys. Hope you're having a good day. Happy Sunday. And yeah, here's our Moomoo portfolio buy and hold account. We're going to be looking at some stocks. If you guys want me to look at, let me know. I did want to go over one stock in particular first, and let's just go ahead and get straight into it. Yo, what up, Carmen? We'll look at Zim as well. I think Zim, that's like the shipping international dividend stock right here. Let me actually, I think they're on my watch list somewhere down here. You know what? I'm not really going to look for it, but I'm going to talk about NVO right here. This is Novo Nordisk. This is the weight loss company right here we've all probably heard of. This is the company that owns Ozempic, so it's really popular. The valuation on this one actually looks pretty fair right now. They're trading at a 21 PE, so they're trading at 21 times net income. They have a nice dividend as well. You get 2% of your money back in a dividend, which is pretty cool. And also, check this out down here. I mean, they're printing money. They're making over $4 billion of net income a quarter. So that's what's crazy. So this is just a nice growing company. This is a lot of people don't like the healthcare names, but look, 95% of the revenue comes from their obesity care products. So NVO is a cool company, I think. So yeah, let's go look at Zim right here. Hey, thanks again, Luke, for dropping a like. I appreciate you, homie. So here, someone said Zim right here. So this is Zim Integrated Shipping. So this company has a rule where whenever they make net income, 50% of that net income will be paid out in a dividend. So a lot of dividend investors like this company. And look at the stock price on the top left. This whole company is worth $17. And if we go to their dividend right here, look in 2022. That year, they paid $27 in dividends. That's when there was a bunch of supply chain logistics problems, and they were just making a lot of money from that. They paid out $27 in dividends. Now for the full year 2024, they only paid out $4, but still, that's not bad. Anyway, this is just like a higher yielding play that you'd want to buy whenever there's supply chain issues like right now. That looks like a company that could benefit. Yo, what up, David East? How's it going, man? I am Haniel in the Discord. Oh, really, Philly? That's what's up, man. Good to see you. So someone said Zoom stock. Yo, that's one of my bigger losers. Check this out. Yo, I just like being fully transparent right here. If we go all time, we're only up 3% all time in here. So we've definitely underperformed the market. But check this out. One of our bigger losers, we're down 49% on Zoom. And here's what I like about this company. Here's what I think will surprise a lot of people. So the whole company is worth $23 billion. So remember that number right there. The whole company is worth $23 billion. And let's see how much cash they have. They have $7.8 billion of cash. So literally like 40% of the whole company's market cap is just their cash on hand. Oh, and they have no debt. So for that reason right there, I'm not selling my Zoom. I think this one's just a hold right now. And they're making a decent amount of net income. Like, look at that, over $1 billion in net income a year. So they're actually doing great right now. But they've seen some slower sales growth. Look at that. The sales are just up 3% year over year. A lot of people don't like that. But the margin growth is there. And the no debt on this company. I like that they have no debt. They're making actually a lot of interest on their cash as well. The high interest rate environment benefits companies with lots of cash and no debt. So yeah. All right, let's see here. How do I do options? Yo, you should watch a video for that one. GoPro is making big moves. Yo, I feel bad for GoPro. That company's going bankrupt. Look at this right here. Y'all remember GoPro, like the camera company? Look at this stock right here. That is not what you want to see. Went from $9 to 79 cents. Wow, they're a penny stock now. That's unfortunate. So if you look in the top right, this is so sad. Look in the top right. This whole company is worth $125 million. So if you wanted to, you could buy the whole company of GoPro at $125 million valuation. And check this out. This is why they're at this valuation. They lost $50 million in the most recent quarter. They've seen so much Chinese competition. I forget the brand, but there's so many cooler brands than GoPro for cameras that are cheaper. And anyway, this is probably why they're just losing a lot of net income. 50 million, and how much was the whole company worth? Yeah, 125 million. So they literally lost half the company. So just think about that literally for a second. The whole company's worth 125 million, and they lost 50 million just in the most recent quarter. If you don't even look at the other quarters, it's like 200 million. So here's VERU stock. What's this one right here? Wait, VERU. So I've never heard of this company. So this is Veru stock. So another like penny stock. So yeah, 61 cent stock, in the market cap is 89 million. So very small market cap. So these ones are very risky just because of the small market cap. But let's see. Oh, so I don't want to read that word right there. I'm gonna click off of that. So did y'all see what they were selling? Oh my goodness, there's no way. I'll go back over. I'm gonna get this stream taken down. This is not good, but that's what they're selling. Oh my goodness. So we're just gonna Luke, what is that stock, dude? Someone said, yo, Wang35 said Lululemon. Let's check that one out. So Lululemon, they just reported earnings, and they lost their margins. Like, it wasn't the end of the day. I still like Lululemon better than a Nike. I think it's a better buy. Like, look at this net income right here. Here's the good news. I mean, they're still making like there's no chance of this company going bankrupt. I mean, they're making $400 million of net income every quarter. So very profitable company, but this is the bad news. They just lost their margin. So check this out. You see how the revenue was up 7% year over year? So revenue grew 7, but the net income actually fell 2% year over year. So what does that like mean? It means they see net income fell 2.13% year over year. So if you go to the net margin actually fell 8%. But it's not the end of the world for them. They're still making a lot of net income, and the guidance wasn't too great. But I like the risk to reward on them. Aiden said, can you look at Carvana, CVNA? Let's check this one out. Carvana. Yeah, what up, Ryan? How's it going, man? Veru, baby. Yo, I don't even know what that stock is. Yeah, I know. I don't. All right. So, by the way, I am at a hotel right now, and this Wi-Fi is pretty trash. I do apologize. So if you want to hit the follow button, I'd appreciate that. We're going to be live later tonight. I'm going to do like a midnight live stream, by the way. That should be fun. Dude, we might have to go to the other app because bro, you're kidding me. All right, so let's try this again. If it doesn't want to work here, so CVNA, Carvana. This company was about to go bankrupt, then they got saved. They burned all the bondholders. Waffly, I'm not sure how to do that, brother. I wish I could help you out there. This thing just does not want to work. I apologize. What up, Michael? How's it going, man? I guess we're gonna go to Weeble then because this just doesn't want to work. What up? We'll get to we'll look at APLD as well. What's up, Yazzo? Jeez Louise. All right, there we go. We'll switch to Weeble right here. Yeah, this Apple Play is not wanting to work with me right now. All right, so CVNA. Let's see if we can pull up Carvana on this one right here. It's just my internet, so it actually... Okay, this is not good. All right, hopefully we're back. All right, so I think we're good now. Look at Carvana right here. Carvana has actually seen some insane stock price appreciation. Like, look at this. The company was literally $3 just 2 years ago. This was a $3 stock, and now it's $300. And that's because they thought this company was going to go bankrupt, but now they're actually making a boatload of net income. Like, look at that in the most recent quarter. I mean, they're actually making net income every single quarter now. So this is great news. It was 300 million. That's like a record quarter. And the sales, the used car market's doing pretty good right now with all the tariffs and stuff. And the revenue's up 38% year over year. So actually, Carvana, that one out of all the meme stocks, like, I could see why people like that one. They're actually making a lot of net income. When did you buy AMD? I've been buying AMD a lot of times. I've been dollar cost averaging into that one. But yeah, we're down 6% on them, as you can see right here. Anyway, let's keep going here. If it would load here. You think we're green tomorrow? Hey, actually, if we go to the overnight market right here, the thing is warning me of unstable internet connection. Great. So if we go to our Robinhood account right now, we are up in the overnight market. We're up 0.14% right now, so that's good news. And if we go to the S&P, I think the S&P was up like... All right, dude, I might just have to end the stream. That's not good. All right. Hopefully, hey, we might have to end the stream if the Wi-Fi just keeps bugging on me. But I appreciate y'all being here. If you wanted the follow button, we'll be live later tonight. But yeah, our Robinhood account is up in the overnight market. We're up 0.15%. Constellation Energy's up 0.15. Meta's up 0.3. So hey, not bad. Let's see. UEC, that's the uranium company. Wait, UEC, so this company has like a uranium mine. So, yeah, rough. I know this internet is not good. So here's Uranium Energy. They actually bought a mine from Rio Tinto for like $500 million a long time ago. Let's see, did they have any like revenue? So yeah, 50 million of revenue in the most recent quarter. Mainly this one just follows the price of uranium. They have a really good balance sheet as well. So that's good news for UEC. But yeah, this one, if we look at, I think it's UU or URA, ticker symbol URA is the uranium ETF. Yeah, bro, I need the Starlink right now. Yeah, so here's the ticker symbol URA is the global uranium ETF. So you could just get exposure to all the uranium stocks through ticker symbol URA. So that's an interesting one. Let's see, is that it? Yeah, UEC. That's 3.75% of this ETF right here. So that's interesting. I got Chemico. Yeah, I like Chemico as well. That's probably my favorite one. What do you think about Futu? So yeah, this app I'm on right now that's their stock right there. So you know what? We'll check out that stock. So this app that I'm using right now is called Moomoo. If you want to get it, it's in the link tree in bio, first link there. But they have a stock, and they're kind of like Robinhood. Robinhood's publicly traded. This app is publicly traded as well, and they actually have some very good fundamentals. So check this out right here. We can see their users. I mean, it's growing very nicely. It's 17% year over year. 26 million users. We can see client assets are now at 106 billion. That's crazy. And they're just super profitable and growing. Like if we go to the revenue, it's up 81% year over year. So they've seen some phenomenal growth of the revenue and the net income as well. The net income is up 107% year over year. So I do own this company, by the way. If we go right here, I got 7 shares of FUTU stock. So yeah, they're cool. Oh yeah, I wanted to look at APLD. What's up, man? So APLD, that's a company owned by NVIDIA. So let's go look at NVIDIA's portfolio actually. So NVIDIA owns like part of, wait, what the? Here we go. So NVIDIA owns part of CoreWeave and APLD. And APLD and CoreWeave just went to a huge partnership. I think NVIDIA like orchestrated that. But here's APLD stock. They were down 10% the most recent day. Hey, maybe now's a buy the dip opportunity. But here's what I really like about them. This doesn't even include their new partnership with CoreWeave. But if you go to the revenue right here, 33% of it comes from their cloud service business. And look at the growth here. I mean, this is really impressive. It grew 220% from the previous year. So that's like very impressive growth. So that's what I do like about this company. And it's going to, there's going to be more growth in the future with the new partnership. So revenue's up 22%. They are losing net income, but it's okay when they're a high growth company in the early stage. So, and NVIDIA owns part of them. So they're cool. What do you just think about NVIDIA? Oh yeah, we'll look at NEE as well. NEE, this is NextEra Energy. This is the largest utility stock in the U.S. So yeah, $153 billion company. They're a regulated utility. They own like all of Florida for utilities, and they have a nice yield. If you're looking for a dividend play, this one has a 2.82% dividend yield, and they grow their dividend every year. They can easily afford the payout ratio as well. So yeah, they own Florida Power and Light, which it has like 80% of Florida's power. So yeah, they're very profitable. They're making basically 1 to 2 billion of net income a quarter. They just pay it out, half of that out in dividends. So yeah, let's go look. What up, A&H? How's it going? So we'll look at NVIDIA as well. I love NVIDIA. Best chip stock out there. I own AMD, but I'm also bullish on NVIDIA. I can't be bullish on one and bearish the other. So here's the thing about NVIDIA that I really like. Check this out. So we can see like their PC GPU market share. NVIDIA has an 18% market share, which is pretty strong. Their automotive revenue keeps on growing as well. And check this out. Here's why NVIDIA, I believe, deserves all the hype. Check this out. The computer networking revenue just grows every quarter to a new record. It's up 75% from the previous year. So that's incredible. And it's not just the revenue, but the profits. Like if you go to the net income, it was 18 billion in the most recent quarter, up 26% from the previous year. So anyway, NVIDIA just prints money. Cash from operations, the free cash flow was up 80%. So NVIDIA, that's a great just buy and hold for the long run. No need to like sell out of them. Just hold them on, I think. Yo, what up, Mac? How's it going, man? Palantir is much better than NVIDIA, someone said. Hey, we can check out NVIDIA or Palantir as well. Yo, what up, Carmen? I love Palantir. The valuation is a little high. That's the thing. The bad news about Palantir, but this is a great company. Like half their revenue literally comes from the government. Government is 55% of the revenue. And look at the government revenue growth. This is why Palantir is incredible. It's up 45%. That's incredible growth on the government revenue. It's same with the commercial revenue, like S&P 500 companies. The commercial revenue is also at a new record. That's the other half of their business, 44% of their business. If it would load here. Oh, well, maybe it won't. But anyway, we can also see their balance sheet right here. They have a monster balance sheet. They actually have no debt whatsoever. So they have no debt. They have $5 billion of cash, or we can see exactly how much cash they have. I'm at a hotel right now, and by the way, the Wi-Fi is trash here. So I wanted to stream anyway because I like streaming on Sunday. They have $5.5 billion of cash. So incredible. They're making net income every quarter. Let's see the commercial revenue loads. Yeah, the commercial revenue as well. It's up 33% from the previous year. So very impressive growth on Palantir, but the valuation is a little high on them, I think. Yo, what up, Patrice? How's it going? So let's see. Someone said OSCR. Yeah, Oscar Health. This is a health life insurance company. I love this one for the growth. I actually think this one is a bit undervalued right now. Like, look, they've been flat for the past year. Like, if we zoom out, the same prices they were a year ago. Yet the fundamentals have very much grown. Like, if we just look at their total revenue right here, this is what I don't believe. Like, this is so impressive. And 2020, it was 590 million. Now it's literally for the full year of 2024, it was 9.2 billion. I mean, that's incredible growth. And the reason the stock has been flat because they're still struggling to get net income positive. But I think if you give this company a year or two, they're going to be making net income every quarter. And they just had a great quarter. The net income grew 55% for the previous year. So anyway, Oscar Health, I really like that one. They're starting to get profitable. AirPods makes more revenue than Palantir. Hey, maybe it does. I don't know. See, if I could actually go check that. We could look at Apple if anyone wants me to look at Apple. Taiwan Semi will perform. Yo, I love Taiwan Semi for the dividend. Yo, you get like a 1.1% yield and the huge wafer exposure. So here, someone said Kava Group. Hey, how's it going, man? So Kava Group, this is that restaurant. I think they're like a Chipotle competitor. I don't remember, but I like the growth here. If you just go to it right here, for restaurant in this environment, it's pretty decent. Revenue grew 29% from the previous year. So that's really impressive. And look at this net income growth. They're making net income every quarter. So they're a very, profitable company. Sales grew 28. The net income grew 80% year over year. So they're really growing their net margin, which is a great sign. So, 8 to 10% net margins for a restaurant, not bad. I think that one might be a little oversold right now. I don't know. So Max said Qcom. I'm saying that weird. Qualcomm. Yeah, dude. Good valuation now to take a stake in it. Let's go check them out, actually. I haven't looked at this one in a while. I think they own Snapdragon. I know they make chips in a lot of Apple devices. Yo, what up, Christian? We'll look at PayPal as well. How's it going, man? So here's Qualcomm. Let's go see the valuation on this company. So Morningstar has it at $170. The PE ratio is at 15. So that means they're trading at 15 times net income. Historically, that's a very fair valuation. Oh, and check this out. We can see their smartphone chip market share. That's what I love about this app. We can see all these metrics. So they have a 21% smartphone chip market share. Well, let's go see the net income down here. So, wow, look at this net income. They're making easily 2 to 3 billion in net income every quarter, and it's still growing. It grew 20% from the previous year. What about the dividend? Yeah, so even if you buy this company, you get a 2.2% dividend yield. The payout ratio is only a 36%. So Qualcomm, actually, I like that one. I think the valuation is fair, and you get the nice yield. So yeah, I like that one, Mac. What's up? Look at Clover. It's about to break out past the So yo, Carmen, give me the ticker symbol for that one. I'll check it out. Yo, Barella said, can you do PATH? Yo, I don't like this company. This is one of my biggest losers right here. So I'm down like 50% on this company right here. But right here, the CEO quit out of nowhere. and it was a huge unexpected turn of events. So the CEO quit out of nowhere, left the management team for dead. This company has no net debt, which is great news. No net debt on this company. I know they have like a lot of cash earning interest. They're just now getting net income positive. They did lose net income in the most recent quarter, which was bad news. The free cash flow is decent on this company. Like they're making like 100 million of free cash flow a quarter. Yeah, hey Joshua, if you want to get the app I'm on right now, the software, it's in the link tree in my bio, the very first link there. I love all the analysis you can do on there. But yeah, UiPath here, I'll show you this real quick. I just like being completely transparent. Don't listen to me. I'm not an expert. You can see some of our bigger losses here. We have lost over 1,000 on that stock. We're down 41%. So I'm not buying more here. I'm looking to sell out of that stock. So yeah. What's your favorite stock been lately? My favorite stock has probably been APH. It's a stock you've never heard of, Amphenol Group, just because it's performed so well. But I'm definitely not buying more at this valuation because the stock is pretty much at all-time highs. They just have a huge partnership with NVIDIA's NVLink. NVIDIA's new NVLink product uses 2 miles of copper cables, and Amphenol Group is the one that's providing those copper cables, or a huge chunk of it. They had a huge chunk of orders from NVIDIA. Sorry. So, I wanted to look at PayPal stock. Yeah, let's check it out. Yo, Arepa, thanks again for the, thank you. I appreciate that. So let's look at PayPal stock right here. They're trading at like a commodity valuation. The valuation is pretty low on PayPal actually. So we'll go analyze them. They're down 5% on Friday. I do apologize. I'm in a hotel right now and the hotel Wi-Fi is so trash. But I wanted to stream anyway. We'll be live streaming later tonight. I want to do like a midnight live stream. So if you want to hit the follow button, I appreciate that. Anyway, the PE is a 15. So very low, very fair valuation on them. And the net income is very strong here. Look at that. They're making over $1 billion of net income every quarter. I think the reason PayPal trades at that like low valuation is because of the slowing revenue growth, like the lifeblood of the company. The revenue only grew 1% from the previous year. So that's not that much growth of the sales, but they grew their margin because the net income grew 44%. So that actually means that they're expanding their net margin, which is great news. Yeah, look at that. Their net margin was a 16% in the most recent quarter. So that's PayPal. I like that one. Hotel Wi-Fi sucks. Yeah, exactly, man. I do apologize. Dark Matter. He said, I think this is an ETF right here. Let's check it out. So this is the semiconductor ETF. So if you're like, I don't know whether to individually buy NVIDIA or AMD. Yeah, dude, this thing is taking forever to load. I can't believe this. Today out of all days. So yeah, happy Father's Day. Happy Sunday, by the way. But yeah, the iShares Semiconductor ETF. If you don't know whether to buy NVIDIA or AMD individually, you can just buy the whole sector through this ETF right here. It breaks your money up for you into Broadcom, NVIDIA, Texas Instruments. Yeah. Oh, and by the way, if you're on the stream and you randomly see my stream just like get taken down, please subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. My stream's probably going to randomly get taken down like it has for the past 10 streams. So if you're wondering what happened, I'm going to be continuing the stream on YouTube. It's called Nathan Robert. Yo, what up, Liam? He said, can you review Delcath? What's the, I don't know the ticker symbol for that one, but I'll just type it in manually for you because I appreciate you. Oh, so this company's on my watch list. I've heard of this company. So this is ticker symbol DCTH. And look, the stock is actually done pretty decent. They're pretty close to all-time high. So let's go check out the financials right here. So they own something called, or 90% of the revenue is the Hepzato kit. I don't know what that is, but hey, it looks interesting. So let's see how the actual numbers are doing here. So look at that revenue growth. This is actually great news. Now, 1 year ago, the revenue was 3 million. Now it's 20 million. So they've actually seen a lot of revenue growth. So that's what I love to see. And they're actually making net income. In the most recent quarter, they made $1 million of net income. So, and that was real net income, not like a one-time adjustment. They have a monster balance sheet as well. Look at that. Their assets just went up a bunch and their liabilities went down. So this company, their financials look incredible. Like the revenue's growing. They're profitable already. They have no debt, lots of cash. So yeah. Yo, Jeff Mack. He said, oh yeah, then we'll look at Clover after this. He said, "What are your thoughts, or do you have any update on Perion Network?" So, yeah, if we go to this stock down here, look at this. We are down 56% on ticker symbol PERI. Look at this. I was dollar cost averaging into this company. All those little buys, that's where I was buying the company. So make sure you're buying a high quality stock when you buy into them. But here's why I'm not selling this company. Look in the top right. The whole company is worth $420 million. So the whole company is worth $400 million. And I think they have $380 million of cash. Let me just double check this. So the whole company, yeah, 360 million of cash, and the whole company is worth 420. So literally 80% of this company's market cap is their cash on hand, but you still got to be careful because look at that. They actually lost net income in the most recent quarter. When I was originally buying this company, they were making 20, 30 million a quarter. Now they're losing money every quarter. So it's a tough buy, but I just can't sell out of that one. Oh yeah, let's take a look at CLOV. So someone said Clover Health. He likes it over Oscar Health. So let's go check this one out. Actually, this one has seen some incredible stock price appreciation, especially from 2024. This was $1 in 2024. So let's go check them out from their financials. So yeah, this is an insurance company. So look at that, 98% of their revenue comes from their insurance. And look at that, it grew 33% from the previous year for the 2025 Q1. So they actually just had a huge, nice spike in revenue. I know the insurance companies are really profitable. So revenue grew 33% year over year, and they're not net income positive yet, but they're so close to net income positivity. They're kind of like, they're kind of like Oscar Health. They're so close to getting net income positive. So Clover Health, that one is interesting. I love the sales growth is the best part there. The fact that they were growing their sales incredibly. Oh, it's treatment. Okay, what's up, Ryan? What stocks have you gone through so far? Hey, if you missed anything, you can replay the stream. I'm streaming on YouTube. Here, I'll show you my portfolio real quick. I want to go back to Robinhood and see how the market's doing. We're up 0.15% right now. That's what's cool. Market is open right now. We can see the S&P 500 really quickly, see how it's doing in the overnight market. Again, okay, there we go. So yeah, the Qs, they're up 0.21%. That's actually not bad. The fact that the market's not red right now is a great sign. I thought all the geopolitical stuff would make the market go red, but hey, no, the markets are green right now. Oh, well, actually, we just went red on the day. That's all right. We also have a Roth IRA. We're up 1% in our Roth IRA. And here's our risk on portfolios. Anything up in here? Hey, AMD's up 0.73%. Not bad. Reddit's up. I'm sure there's some down. Yeah, Disney's down. Just buy VOO and stop. Yeah, hey, that's what a lot of people like to do. Just buy the S&P 500 and forget about it. Yo, Cyrus said HZ in stock. He said Horizon Oil is looking super good at the moment. Let's go check it out. He said ticker symbol HZN. So this is an Australian company. So I wouldn't buy this one just because there'd be foreign taxes. What's the market cap? So they're a $300 million company, very small market cap for this stock right here. But yeah, they've actually done pretty decent. Look at that. They're close to 52-week high. Do they pay a dividend though? That looks weird. Let's see. China development, New Zealand development. So yeah, I would just stay away from this company. They are profitable. I mean, they made $6 million. So in the most recent quarter, so I would just be careful with that one. I don't like the small market cap, and it's Australian. Let's see here. KC or CASY stock. What's this one? KC General Stores. So maybe this is like a Kroger or look at that, or like a dollar store. Look at that. This stock is at an all-time high right now. That's actually very interesting. That's actually incredible. So this stock is at an all-time high right now. Let's go see if we can figure out why. So what's the stock price? 500. Analysts have it at $512. Let's see. So yeah, my phone's getting low here. They're making a lot of net income. Look at that. They're making easily over 100 million of net income a quarter. I don't think they pay a dividend. It's so loud. Yeah. Oh my goodness. Oh, please. Okay, there we go. All right, we're back. Sorry, I'm on the terrible Wi-Fi. But anyway, they have a 0.4% dividend yield, a very low payout ratio. So actually, I can see why this company's at all-time high. I mean, they're super profitable. I mean, the most profitable they've ever been. So yeah, that's interesting. Prod by hey Prod, yeah, if you want to get this app, it's in the link tree in my bio. It's the very first link there. It's my favorite app for analysis. Yeah. And it's like my main account. I got all my stocks in here. But anyway, let's keep going here. Um, Wait, there was one stock I wanted to look at. Let's see. Thoughts on SNX. Let's check out this stock right here. TD Synex. Oop, where'd it go? SNX stock. Then we'll look at LB and Rocket Lab. Rocket Lab's a cool one. So here's TD Synex. So I've actually never heard of this company before. Look at that. The stock's kind of been flat for a while. Same price that it was back in 2020. So stock's kind of been flat for a while. But let's go look at the financials here. Let's judge them that way. So they're making 14 billion a quarter. Are they profitable? Yeah, look at that. So they're making over 100, they're making 100 to 200 million of net income every quarter. So they're a very profitable company. They have a nice yield, 1.4% yield, 20% payout ratio. I wonder what industry they're in, or I'll just go check right here. Electronics and computer devices. So a technology company. That's interesting. I do wonder, like they kind of just aren't growing that much. That might be why the stock has been flat for a while. The company's just not growing. Yeah, the stream is lagging. I know, man. That's my fault. It's the Wi-Fi's fault, man. This sucks. I apologize. We're gonna be live later tonight. If you want to hit the follow button, I'd appreciate that. We're gonna do like a midnight live stream. Hopefully the internet will be fixed then. But anyway, let's keep going here. David said thoughts on LB stock. Let's check out this stock right here if the Wi-Fi allows it. This is Landbridge right here. I was actually just looking at this company the other day. They own a bunch of like oil fields in Texas, and they collect a lot of royalties from their oil fields, which is pretty interesting. So, dude, I can't believe this. All right. Hopefully, I've never in my life had the stream lag this much, so I don't know what to say. But we can look at the financials here. So yeah, actually they just IPO'd, but look at this growth that they do have. The revenue is up 131% from the previous year. That's actually very solid growth. 131% year over year. And they made net income, 15 million of net income. Yeah, they have like a crazy 35% net margin. They pay a dividend as well. Yeah, 0.3% dividend yield. So ticker symbol LB, that one's actually really interesting. I do like that one. I was looking at them the other day for their like oil royalties or something like that. Asus says Rocket Lab. So yeah, Rocket Lab, this is one of the few space stocks that I really like. So Rocket Lab, if you look at them, yeah, they've actually done really good. And that's because the fundamentals have aligned with that. The fundamentals are doing very good as well. So if we go and look at where their revenue comes from, 70% of their revenue comes from their space systems business. And if we look at how that's doing, it's literally at a record. It's up 45% from the previous year. So this company has seen some very nice growth of their space systems revenue, and it aligns with their stock price. And they also have a huge backlog. They have like a $1.5 billion backlog of orders that they haven't fulfilled yet. So Rocket Lab, I really like them. Alex, what's up, man? BBWI. What's this stock? Is that Bath and Body Works? Huh. Let's check this one out. Then we'll look at RTX and XRP. So here's Bath and Body Works. So this is like that mall stock where you buy soaps and stuff like that. So let's go check out the financials here. Let's see if they're profitable. That is what I want to see. So actually, yeah, they are profitable. They're actually making a lot of money. I'm actually surprised here. They're making like 200 million plus of net income every quarter when you kind of average it out there. Is that real? Yeah, that's real net income. So they're making like 400 million of net income a year. So that's actually very solid. They have a dividend as well, a 3.2% dividend. They can afford the dividend, only a 22% payout ratio. So, actually surprisingly, this company isn't the worst. But I just, I don't really expect this company to outperform the S&P 500. This is the stock is the same price that it was back in 2009. Dang. So stock has been flat for a while, but you get the nice yield there. Oh yeah, so let's look at RTX as well, Raytheon. Hey, thanks, Luke. Yeah, hey, if you want to drop a like, I'd appreciate that. But yeah, I apologize for the lag of the stream. So here's Raytheon. This is an aerospace and defense company. So look at this one. They're at an all-time high right now, mainly from all like the geopolitical stuff with all the fears. So let's go check out how they're doing. So right now the stock price is $145. Morningstar has it at 130. Anyway, here's where the revenue comes from. Pratt and Whitney, Collins Aerospace, and Raytheon. They have a lot of military contracts. And if we go to the net income down here, I mean, they're really profitable. They're making 1.5 billion of net income every quarter. They had a one-time adjustment that one quarter where it only said 100 million, and that was a one-time adjustment. But they're super profitable. I really like Raytheon. And even if you buy this stock right now at an all-time high, you still get a nice yield. They have a 1.7% dividend yield, and the payout ratio is actually much lower because they had that one-time adjustment. So anyway, Raytheon, they're a cool company. Let's see. Yo, Bobby, what's up, man? He said NVTS. Yo, that's Nvidia Semiconductor. So this company just got saved from Nvidia. This company was going to go bankrupt, and then they had a huge partnership with Nvidia. So check this out. This stock was literally $1 before the partnership, and now it's $7 a share. So it really saved the company because if the revenue partnership hasn't hit yet. But if we look at the company before the partnership, it wasn't looking good. The revenue was down 39% from the previous year. They were losing 20 million of net income a quarter. So that partnership with Nvidia really saved the company. And I'm curious to see how that'll how that'll do. Because look at that. Before that partnership, before the spike up, they were pretty much at all-time lows. So nice. Let's see. Awesome said Prospect Capital, PSCC. So yeah, Prospect Capital, this is a BDC right here, a business development company. Dang, look at that. Unfortunately, this stock is not done too good. Is that an all-time low? So this stock is at an all-time low. So that's really unfortunate. I know they have a really high dividend yield. Where's the dividend on this? Oops. So yeah, look at the dividend yield. So unfortunately, I don't know if, oh, yep, there we go. Yep. Thank you, TikTok. Yep, I know the Wi-Fi is terrible. All right, hopefully we're back. Sorry for the lag. Make sure you hit the follow button. We'll be live later tonight. I can't believe, we're just going to stream until the internet just takes us down, okay? So this one has a 20% dividend yield, and unfortunately, it's just not sustainable. The stock's at an all-time low. So, yeah, I'd be careful with that one. I'd rather buy a different BDC, a different business development company. I own their competitor. I own ticker symbol Main. This is Main Street Capital. They also pay a monthly dividend. So if you're looking for one of the higher yielding stocks that pay a monthly dividend, I own Main Street Capital. Daniel said HCTI. What's HCTI? Let's check that one out. Hybro Hood. Oh yeah, we can look at Robinhood as well. I own some Robinhood. Yo, what up, username? I want to. Oh, HIMS as well. Dude, I want to look at all these stocks, but the Wi-Fi just won't allow me to. This is awful. Okay, so I wouldn't buy this company. So look at that one. This stock is at an all-time low right now, and the whole company, get this, the whole company is worth $8 million. So that's like an extremely small market cap. I just couldn't trust my money. This could maybe be a fun little swing trade, but whole company's worth $8 million. Okay, thank you, TikTok. All right. The whole company's worth $8 million, and they lost $2 million in the most recent quarter. Anyway, I think you get that one. I just wouldn't buy that stock. So, someone said Robinhood stock. Yeah, that one, I do own that one here in my Webull account. We got 5 shares of Robinhood. I took a lot of profits on this company as well. But yeah, this is that brokerage that I have a Robinhood account as well. But yeah, this stock is at an all-time high right now, mainly because Bitcoin is. If you look at the price of Bitcoin and Robinhood, they usually follow each other. So, and the fundamentals are just keep on growing right here. Check this out. The revenue on Robinhood grew 50% from the previous year. Revenue is at an all-time high. And if we go to the net income, they're making hundreds of millions in net income every quarter now, when they used to lose hundreds of millions a quarter. So people can really take Robinhood serious. I believe they'll get added into the S&P 500 as well. So, yeah. Yo, what up, Sermon? How's it going, man? Happy Sunday. Hope you're having a good night. Yeah, happy Father's Day. AAPL. So yeah, we can look at Apple as well. So here's Apple right here. I'm on an Apple device right now. A lot of people are locked in the Apple ecosystem. And let's go look at the fundamentals right here. So they're $196 stock. Analysts have it at $230. Morningstar has it at $200. Here's what I like about the Morningstar research. You can read like, what did the bulls say? What did the bears say about Apple? So I just like looking at that sometimes. But anyway, here's some of the best metrics about Apple. We can see like their smartphone chip market share. They have their own chips. They have a 19% market share, mainly just because they own their own phones. But the iPhone is half of Apple's revenue. So iPhones are half the revenue. Then they have the services revenue. Whenever you buy something in the App Store, Apple takes a 30% fee on that, and it's all high margin for them. How's that business doing? Yeah, look at that. For the full year 2024, it was 96 billion. It's going to be over $100 billion next year. So anyway, Apple is a good company, third largest company in the world. They're making so much net income. They have a dividend as well, nice little dividend growth company tech. So yeah, Apple, oh, I forgot to look at where the revenue comes from, but Apple's cool. Um, let's see here. NVTS, you think has a lot of growth? I don't know yet because we got to see how the partnership with NVIDIA goes. Check out TMC, the metals company. So yeah, the metals company, I used to own this stock. I took some profits on them a long time ago. The thing is, this is a startup right here. This company makes little robots in the ocean that suck the nickel and cobalt out of the ocean water. And so they're a startup right here. They haven't actually done it successfully. So if we actually go to the revenue down here, the revenue, it says no data. There's no data here because they've never sold anything. They've never sold a product or a service. And if we go to the net income, they're losing net income every quarter, obviously like 20 million a quarter. They have more liabilities than assets. So if they can really get this thing successful and actually do it, then there might be something here. And I might consider them after that. I mean, that's kind of being priced in right now with how much they're running up. So anyway, they're a startup right now, and that's why I'd be careful with them because they have no revenue yet. Let's see. Oh yeah, I wanted to look at HIMS as well. So this is HIMS. I love this stock right here. A lot of people think they're a meme company, but this company is no meme in my opinion. They have incredible fundamentals. They have no debt whatsoever. They have like 500 million of cash, making them a lot of interest. So, and actually the best part about HIMS is the growth of the sales. So, look at this right here. If we just look at their revenue, dude. Okay. All right, there we go. So if we look at the revenue right here, the revenue is incredible. The revenue is up 110% from the previous year. So the revenue is literally at a record in the most recent quarter. It's doubled from the previous year. So HIMS has seen some incredible growth of just the sales, and not just the sales, but the profits. Like the free cash flow is incredible. They're making 50 million plus a free cash flow a quarter. The net income is even more impressive. They're making like 50, 70 million a quarter, and it's just going to keep on growing from here. And this monster balance sheet, like I said, they got no net debt. So yeah, I like HIMS. Uh, Neos, are you an investor? Yeah, I own a lot of stocks right here. These are all the stocks that I own in here. Let's see, Fang stock. Wait, Rose Gold. What's up, man? XBOTF. This is a weird ticker symbol. I don't know if I can actually find this stock, but hopefully I can. Yeah, I can't find that stock. It's not viewable on this app. I do apologize there. I can't find that one. So someone said, let's see, Skittle said PN. Let's see this stock right here. Hopefully we can find it as well. Yeah, by the way, I apologize. We're on like the crappiest internet ever. So if you wanted to follow button, we're going to be live streaming later tonight. I guarantee it. We'll be live in a couple hours, probably like 2 or 3. So this sucks. But yeah, if you wanted to follow button, I appreciate that. If you want to get this app I'm on, it's in the link tree in my bio as well. It's my favorite app for analysis right here. Get you started, get some free stocks. But anyway, here's Prime Energy Resources. They're a $240 million company, so a small market cap, $240 million. So oil and gas exploration. But they are profitable. That's actually good news. They're making net income every quarter. The net income did fall 19% year over year, but that's not the end of the world. Yeah, hey, revenue's up 15. They have a really good balance sheet. They pay a dividend. No dividend on this company. It's actually not the end of the world for this stock because they're making net income every quarter. She looked like the internet's finally back. It's actually really smooth now. Let's go. Yo, what up? It's Will. How's it going, man? Apple's management sucks. They're not going. Yeah, the CFO almost went to jail. They lost the Epic Games lawsuit. Oh yeah, NBIS. Is that Nebius? So let's see, NBIS. So yeah, here's Nebius right here. So check this out. I think NVIDIA owns part of this company as well. So NVIDIA is a shareholder, I believe. But let's go look at the fundamentals here. So Nebius is half the revenue. I'm not sure what that is. Then it's Triple 10, Toloka, I don't know what all this stuff is, but let's see. They're still losing net income every quarter, so they're not profitable. But hey, look at that growth though. The revenue went from 11 million to 55 million in the most recent quarter. They've actually seen some very impressive sales growth. They have a really good balance sheet. I don't know why it went like down so much, but they're not leveraged. They have no net debt. I mean, yo, Wumpy Trumpy, dude, thanks so much for all the lightning bolts. I didn't even see that, dude. Yeah, let's look at Fang. My fault, man. Yeah, thanks again for all the gifts there. I really appreciate that. So, Diamondback Energy. So yeah, this is another oil and gas company. They're in the S&P 500. Let's see the dividend on this company. So yeah, if you buy this stock, that's what I like about the oil companies. You usually get the higher dividend yields. So yeah, this company has a 4% dividend, which is pretty cool. 53% payout ratio. So very fair payout ratio. And look, the PE, they just sell a commodity. They just sell oil, but they're trading at 9 times net income. Hey, thanks again for all the roses, dude. I really appreciate that. So yeah, if we go to the net income down here, wow, actually, did they acquire a company or something? The revenue is up 81%. That's actually nuts for an oil company. So revenue is up 81. The net income's also up 84%. They're growing their net income even over $1 billion a quarter. So actually, I'm going to add them to the watch list. Fang's actually doing very great. We no Middle East exposure. Yeah, let's see where the revenue comes from. All from the United States. So hey, check that out. Yeah, let's see, Casham Investing, did they acquire a company? Yeah, so they bought a company for $8 billion, or maybe a little more. Maybe it was like closer to 10 billion. I don't know. But that's really interesting. Yo, it's Will. Good evening, man. I'm a Forex on radar. You think I should get into investing? Yeah, man, I love buying stocks. I love, holding shares in my favorite companies. Like, here's my dividend growth portfolio, by the way. My main account. This is my dividend growth account. We got, Google, Meta. I got McDonald's even. McDonald's, we have a dividend coming in from them. Check this out. Just because I own 13 shares of McDonald's, I'm getting that $23 dividend, which is pretty cool. So, Casey, he said Coca-Cola stock. You know what? That's one of Warren Buffett's main stocks. Let's go to Warren Buffett's portfolio. So, his largest holding is Apple, then American Express, and then it's Coca-Cola. That's 10% of his portfolio. Can you believe that? And this is a great high yielding play. So check this out. If we go to the dividend right here, even if you buy it now, you get a 2.8% dividend yield. So that's an incredible yield. And if you go to the net income down here, it's very strong. They're making 2 to 3 billion of net income every single quarter. And then they just pay a lot of that out in dividends. So they're a very shareholder-friendly company. They own Coca-Cola, they own Sprite, they own a lot of my Fanta. I like a lot of their drinks and stuff. They own Topo Chico, Fairlife Milk. I don't know why I'm trying to go list all their brands, but yeah, Coca-Cola, we all know them. They're a nice dividend play. What single stock would you buy free? Ooh, that's a tough question. If 20,000, right? I would just pick a super safe stock. I'd probably pick, the S&P 500, obviously, but that's a dumb answer. But I'd probably pick like a Google, even a McDonald's right here. McDonald's for the nice dividends I get. Maybe Google, McDonald's. The most recent stock I've bought in here, like if you go back to this portfolio, is Coca-Cola Consolidated. This isn't the same as Coca-Cola. This is the bottling company. But I've been buying the dip on this stock right here. I like that one. Do you have? I do not have any crypto. Let's see. Oh, United Health Group. Let's check that one out as well. ET is better for growth. Yeah, we'll look at Energy Transfer as well. That's an MLP. They don't like the pipelines. So here's United Health Group. If they don't get kicked out of Medicare, Medicaid, they're at an incredibly low valuation. And this is an amazing buy the dip opportunity. They're trading at 13 times PE. The reason the PE is so low because the future is uncertain. They could lose a portion of the revenue in the future, but they have a nice yield, a 2.7% dividend yield, a low fair payout ratio. We're a customer actually. We use OptumRx, and the OptumRx business has grown very nicely. It's at a new record for the full year 2024. Seen some very nice growth, and they're making a net income like 6-7 billion in net income every quarter. So United Health, healthcare play there. If they don't get in too much trouble, that one could be an incredible buy the dip opportunity. So someone said Energy Transfer. They own a lot of pipelines and they have an incredible yield. So check this out. And it's sustainable because they're an MLP, but you got to be careful. And this is why I don't buy this stock right here, because this company will send you a K1 tax form. They're one of the few companies that do that. Because you're technically a partner in the company and not a shareholder because you're buying units, you get sent a K1 tax form. They're a bit notoriously hard to fill out. I accidentally bought one. It cost me $200 with an accountant to get it filled out. So Energy Transfer, great 7% yield. Yeah, 7% yield, but you get the K1 tax form. And if you're fine with that, then that's a great company. Do you have Supermicro? I do have Supermicro Computer. Here, I'll show you that real quick. Yeah, this is my risk portfolio right here. We got a lot of losers in here like Zoom, AMD, Path, but one stock we do own in here is Supermicro. Yeah, we're up 59% on Supermicro. You know, with some of these riskier stocks, you know, Robinhood, SoFi, Reddit, you don't want to have a huge chunk of your portfolio on them. Like, start them out as small positions and then let them grow into bigger positions. Of course, it doesn't always work out. Do you think XRP will go up? Yo, that's a crypto. You know, I don't really look at crypto. I mean, I can show you the price for you. The thing with crypto is there's nothing for us to look at. Like, but that's also a feature of crypto. Like, there's no net income, there's no net margin for them to miss. So that's a unique feature of crypto. But hey, this one's done great. I mean, look at that one since 2024. It was 50 cents and now it's $2. Very nice. I got 100 shares of InnoData at 39. Yo, I love InnoData. So I do own this company. I might be biased. So, of course, I'll say not financial advisor. And hey, if you're enjoying the stream, don't forget to drop a like. By the way, the main way to support me, the only thing I have is a YouTube channel. If you're watching the stream and then it randomly gets taken down, I'm still going to be streaming on YouTube. My YouTube channel is called Nathan Robert. It's in the link tree in my bio, very first link there. I'd really appreciate that if you would just subscribe. But anyway, here's InnoData right here. I just try and show you the numbers for yourself so you can draw your own conclusion. I just like being fully transparent with my portfolios. And here's what I love so much about this stock right here. It's their growth. If we look at 87% of their business, their digital data solutions, it's up 157% from the previous year. Their main customers are literally Google, Meta, Microsoft, Amazon, NVIDIA, and I think it's 5 of the Magnificent Seven. They're all customers of them. Anyway, and now they're profitable. They're making net income every quarter. They have no net debt. They're making a lot of free cash flow. So anyway, InnoData, I do own that one in my Roth IRA, actually. Here, I'll show you that. Here is our Roth IRA, and check that out. We got 9 shares of this one. Someone said Bougie said he got 100 shares. That's what's up, man. So let's see here. Look at Viper. What's the dividend? What's up? What's the the ticker symbol for Viper? I haven't heard of that one. So someone said PANW. Let's go to Nancy Pelosi's portfolio. She owns that stock. So here's Nancy Pelosi's portfolio, you know, super investor. We can track her latest trades and see what she just did and stuff. But one of her largest holdings, you know, is actually a cybersecurity stock that you just said, PANW, Palo Alto Networks. And I love this company. I think it'll impress you. If you have no cybersecurity exposure, you might like this stock right here. So check this out. If we look at this right here, 53% of the revenue comes from their subscription business. I love subscription model companies because it's all reoccurring. But look at the subscription revenue. It's up 18% year over year, literally to a new record. So this company, yeah, look at that annual growth of their subscription business. And, you know, cybersecurity is going to always be needed in the future. A lot of S&P 500 companies use them, but it's $4.2 billion for the full year 2024. And that's just a subscription revenue. You know, they have the support revenue, the product revenue. Yeah, the free cash flow, they're making $500 million plus a free cash flow a quarter. They're making $300 million in net income. So I really like PANW. I also like a CrowdStrike. You know, those are some other good ones. Hey, Nancy Pelosi owns Disney. She just bought some PayPal as well. How do you feel about Pepsi? Yeah, what's up, Harry? Dude, Pepsi. Yeah, let's go check them out. I know they have a nice yield right now. I think around a 4% yield. You know, my phone's getting low here. We're on 4%. We better hustle. So, yeah, here's PepsiCo. They haven't done too good recently. You know, I love a lot of their products. Like, you know, they own Flamin' Hot Cheetos, Doritos, you know, and a lot more. But anyway, let's go look at this right here. So, the dividend, yeah, look at this. You get a 4.2% dividend with this company. The payout ratio is a little high, 76% payout ratio, but I think Pepsi is going to be able to afford the dividend. They're not going to have to cut their dividend, I don't believe, or I hope not. So yeah, the PE is low as well. You're trading at 19 times net income. They've really underperformed Coca-Cola. It's weird. So you get the 4% yield here, the 19 PE ratio. And yeah, the net income is very strong. It's literally $2-3 billion of net income every single quarter. So not bad, Pepsi. And I like a lot of their products as well. Let's see. APLD. Yeah, APLD. That's a company owned by NVIDIA. Since we're over here, we can go to NVIDIA's portfolio. Let's find them right here. So NVIDIA's holdings. So here we go. So, you know, obviously their largest holding is CoreWeave, and they also own APLD. They own some WeRide, they own some Nebius AI. We were just looking at Nebius AI. But anyway, here's APLD right here. They just partnered with CoreWeave, which is pretty cool. And they've already seen some very impressive growth. Like, check this out. If we look right here, they're a data center hosting business and they're a cloud service provider. And look at the cloud service business. It's up 220%. It's seen some very incredible growth. It's up 220% from the previous year, up to 17 million. And with this new CoreWeave partnership, it's supposed to just keep on growing even more. They're still losing net income every quarter, so you still got to be careful of the net income losses. But I think they'll kind of grow their way out of that. And NVIDIA sees something in them. NVIDIA owns part of them. So, hey, that's interesting. What's the name of the site? Oh, hey, what's up, man? Let me pull up the link for you. If you want to get this app I'm on, here you go. The software, it's in the link tree in my bio, the very first link there. I also put a link in the chat, but yeah. Anyway, yeah, I love this app for all the analysis. Yeah, link tree in bio, very first link if you want to get it. It's free. Anyway, Netflix. Yo, dude, Netflix. Here's what I love. Like, let's go. I'll show off all the features this app has. Let's go analyze Netflix, for example. So they show you a lot of metrics that like you wouldn't normally see. Like, look at this. We can see their premium subscribers. It went from, last quarter, it was 282 million. Now it's 301 million premium subscribers. So they have a lot of premium subscribers. And per month, per user, they make $11.69 per month, which is really interesting. And they just print money. Check this out. I mean, Netflix is literally making $2-3 billion of net income every single quarter. Extremely profitable company. And same with free cash flow. You have to go to the FCF right here, free cash flow. It was 2.6 billion in the most recent quarter. So incredible numbers there on Netflix. So yeah, unfortunately, the valuation's too high. Like, this stock is literally at all-time highs right now, but the valuation's high, but they might deserve it because the fundamentals are great there. They have high margins. They have pricing power. So, yeah, hey, New Scale Power, what's the ticker symbol for that one? I can check it out for you. Oh, yeah, Rye said Tesla. So the thing is with Tesla, I'll give you we're going to look at them from a financial point of view. So this is not, you don't really look at Tesla for their financials, but I'll look at them like I judge any other company. They have a really high valuation, 180 times net income they're trading at. And they kind of lost their growth. It's okay for a company to have a high PE if they're a high growth company, but look at this right here. If we go to their total vehicles delivered, it's actually down 13% from the previous year. Like, look at this right here. Their automotive business, their main source of income, 85% of the revenue. If we look at this right here, it's actually down 15% from the previous year. It is not, and this is why, obviously the future, the market cap is pricing in, robo-taxis and robots all in the future, but it's tough to pay that premium right now. Because look, the sales are down 9% year over year, but look at the net income. It actually fell 70% year over year. So if we go to the net margin, it actually collapsed. They just have a 2% net margin right here. So I'd be very careful on that one. We just analyze the chart, or you can do both on that one. Yeah, this thing has a lot of cool charting features as well. Like, there's there's one where you can like match the trend. I wonder if I can pull that up right here. Trend projection. Yeah, this is a really cool feature as well. It like pulls up the exact price of Tesla and it compares it to like other companies and the probability of what's going to happen next. Anyway, there's so many cool features. If you want to learn how to use all the features of this app, I have a tutorial on how to use it in the link tree in my bio. If you just want to get this app, it's in the link tree in my bio. First link there. Yo, please don't spam, bro. Hold on here. We'll get to GitLab. Don't worry. Let's see here. Yo, that one dude, really nice to see you, man. He said MPWR. MPW. Is that monolithic power? Yeah, then we'll get to GitLab. Don't worry. So anyway, here's monolithic power system. So let's go check out the fundamentals here. Do they pay a dividend? Yeah, you get a dividend, a near 1% dividend. They're growing their dividend every year. Look at that. It goes up by $1 every year. It's $2 in 2020. Now it's $5. So let's go see this right here. So look at the net income. They're actually making a lot of net income. We'll look at the operating profit. So yeah, they had a one-time adjustment last quarter. So yeah, this is what you want to look at. And it grew 76%. They're making 150 million of, net income a quarter. The sales grew 39%. That's very impressive growth. I actually really like that. Sales grew 39% year over year. And they have a monster balance sheet. Look at that. No net debt. And their assets keep on growing up. That's incredible. So actually, I really like Monolithic Power. Nice dividend growth there. Should you not sell stocks now? Are they all gonna? Yeah, I wouldn't sell anything. Usually geopolitical stuff is buy the dip opportunity. GitLab. So, oh yeah, GitLab right here. So this company, dang, they haven't really done much since 2022. They're the same price as they were. So let's go look at the financials here. So we look at the annual revenue. So yeah, they haven't been public for too long since 2023. Let's see. So the revenue is up 26% year over year. So they do actually have a lot of revenue growth. What about net income? So the net income's a little choppy. That might be the bad news here. They make net income, then they lose net income. So we want to see some more consistency where they constantly make net income every quarter. But if you average out the 4 quarters, I think they are net income positive. They used to lose money every quarter. Now at least there are some quarters where they make net income. It's not the end of the world. The PE is the valuation is still really high because they haven't really made any profits yet. I, I bet you in 1 to 2 years, that's probably they're probably at a decent risk to reward. I'd have to do some more research on that one. All right, let's see. Oh, Grind, what's up, man? He said thoughts on Intel. Let's check him out, man. So Intel, to be honest with you, I'd rather buy like an AMD or a Taiwan Semi over Intel. Like, unfortunately, Intel is the same price that it was back in 1997. So Intel has done nothing for a long time, and it's unfortunate because they're losing a lot of money right now. If we go to the net income right here, like look at the most recent quarter, they lost 900 million. If you go to the quarter before, they lost 150 million. And then I don't even know how this is possible, but this one quarter, they lost 17 billion of net income just in that one quarter. So that's kind of the bad news around Intel. Also, the free cash flow is really bad as well. Yeah, they're look at this right here. They're losing like billions of free cash flow every quarter. So that's the bad news around Intel. And if you look at this right here, you get a 1.24% dividend with Intel. So you get a 1.24% dividend yield. I'd rather buy a Taiwan Semiconductor. So we saw, their dividend yield. Look at Taiwan Semi. They have a 1.14% dividend yield. And check this out. Here's what I really like about Taiwan Semi. If we go look at their financials, they're trading at a 25 PE, 25 times net income. Fair valuation. They make those 5 nanometer wafer chips, and look at their market share. It keeps on growing. They have a 67% market share in the most recent quarter. And this is the best part right here. The net income is up 60% year over year, $12 billion. And this is American dollars too. So the revenue is up 41% on Taiwan Semiconductor, and the net income grew 60%. That means they're growing their net margin. That's so impressive. 43% net margin now for Taiwan Semiconductor. So you go spend $100 with this company, $43 of that is after-tax profit. So Taiwan's is one I really like. And you get the nice yield, 1.14% yield, low valuation. So I'd rather buy them over an Intel. And hey, I own AMD as well. Like, check this out. We're down on them. I wish I bought Taiwan Semi over AMD, but AMD is still not like the worst company right here. Hey, what up, Brian? Especially for a chip company, 25 PE is really low. Yeah, it is really low. It's like weirdly low. Yeah. That's a lot cheaper than AMD, Nvidia, Broadcom. Yeah, they're like the cheapest chip play, and they're one of the most high quality ones out there. So, let's look at AMD as well. So AMD, this is the one that I own. I am down, 6% on this company. They just had their AI conference. They have so many nice partnerships. They're partnering with Meta, they're partnering with Oracle, they're partnering with a lot of high quality companies, obviously. And look at their GPU market share. Good news for AMD. They have a 16% PC GPU market share, but I like AMD as a data center play. Check this out. 49% of their revenue comes from their data centers. And look at the data center revenue. It's up 57% from the previous year. So it's actually seen some very solid growth there on the data center business and the financials. Like if you look at the FCF, which stands for free cash flow, okay, yeah, there it is. So free cash flow, 700 million, up 91%. So the free cash flow nearly doubled from the previous year. And same with the net income. Look, they're making so much net income now. 700 million in the most recent quarter. Monster balance sheet right here. No net debt on AMD. And and if you guys got any stocks you want me to look at, let me know. I'll check them out for you. I'm reading both the YouTube and the TikTok chat. I appreciate y'all being here. If you wanted to follow, subscribe button, I'd really appreciate that. I might do a stream in a couple hours from now as well. I don't know if I'll be streaming for much longer, so if you got any last minute stocks you want to look at, let me know. I want to also check on the market really quickly. Yeah, my phone's on 3% as well. Let's go see. So yeah, here's our Robinhood portfolio. Meta's up 0.3%. We saw Meta. Actually, I want to talk about Meta as well because they just acquired Scale AI, or 50% of Scale AI for 15 billion, and that's going to add over 500 million of revenue a quarter. I was just looking at Meta's financials earlier today. Did you know Meta makes 400 million of interest on their cash a quarter? Because they have like 90 billion of cash and like 10 billion of debt. Like they make so much interest. That's why Meta likes the high interest rate environment. But check this out. This is what's crazy about Meta. Look at their daily active users is 3.43 billion. So basically half the world is on a Meta app once a day. They on Instagram, Facebook, WhatsApp, and look at the net income. I mean, this is so impressive. It's up 34% from the previous year. So look, the revenue is up 16%. The net income grew 34%. They keep on growing their margin. That's the crazy thing. Meta and their Facebook ads, it's all super high margin, 40% net margin for a $1.2 trillion company, monster balance sheet. And they're investing in AI, investing in the future. And look at that, Mark Zuck owns 13.7% of the company. Yo, what up, Kaizo Play? How's it going? Hope you're having a good Sunday. Yeah, happy Father's Day. Hope you had a good day. And we'll have a good day tomorrow, hopefully. It looks like the market's green. I actually thought the market would probably go down by another percent. Anything could happen tomorrow morning. But for right now, the market seems pretty stable and kind of green. As like geopolitical issues aren't really escalating too much. So that's the good news there. But here, I want to go to my growthy portfolio really quick. There was a stock that I really like that I just purchased. So my newest stock in here is actually T-Mobile. I've never previously owned this company. I just bought the dip on them, like literally the past 3 most recent trading days. And you could get in at a lower cost basis than me. I'm down 4% on my T-Mobile. But yeah, here's where I bought my shares. A couple of days ago, I bought my whole entire position in them. Here's why I bought T-Mobile. They also just partner with Starlink, which is pretty cool. If anyone saw that Super Bowl ad. But hey, y'all see the T-Mobile, or has anyone heard of Mint Mobile? Mint Mobile and the Ryan Reynolds ads? That marketing was genius by T-Mobile. Anyway, I know too much about this company than I should, okay? But check this out. This is another company that keeps on growing their net margin, and here's why I bought them. The revenue grew 6.5% year over year. Okay growth, 6%, but the net income grew 25%. This is incredible. So if you go to the net margin right here, the net margin was a 14%. If you zoom out to like 2021, they had single digit margins. They was 5% net margins, and now they've expanded it to double digit margins. Incredible here. And they also pay dividends. Actually, look at this right here. So they make $3 billion a quarter, just over $3 billion of net income a quarter. Let's go see how much their dividend cost. Their dividend only cost $1 billion a quarter. So the dividend payout ratio is only at 33%. So dividend cost $1 billion a quarter. What are they doing with all their leftover cash? They're doing major stock buybacks. They bought back 2.5 billion of the stock the most recent quarter, 5 billion the quarter before. So if we go to the total common shares outstanding, you now own 3.4% more of the company than you did a year ago. So not only do you own 3.4% more of the company, but you also get a 1.5% yield. So this company is so shareholder friendly. They've literally given you a 5% return. A 5% return through cash and stock buybacks the past year. So anyway, T-Mobile, shareholder-friendly company, and the PE right now, they trade at 21 times net income. So anyway, that's why I decided to pick up 4 shares of T-Mobile as my most recent purchase. And my other most recent purchase, this is FUTU right here. So if you're wondering what is FUTU stock, that is this app right here. So literally this app right here, it's called Moomoo. That is the stock publicly traded. So I own this brokerage right here. FUTU, this is their stock, and they are so profitable. They made so much money that they even paid out a special dividend, an extra $2 a share just for owning them. And check this out. Here's what's so impressive about this company. They just paid a $2 special dividend. Well, look at the earnings per share in the most recent quarter. It was $15. So that little cool $2 dividend costed them nothing. But anyway, this is the best part right here, the growth. The revenue is up 81% from the previous year. So the revenue is up 81 and also the net income as well. Look at that. The net income's at a record. It's also up a crazy 109% from the previous year. So FUTU is an incredible growth company. They're the brokerage. So actually, there's some more metrics on here. Actually, I like analyzing stocks on this app right here. Like here's the same stock right here. They give us some more data right here. Dang, my phone's on 2%. We're just gonna stream until my phone dies. I appreciate y'all being here. But S Future said, I don't know anything about stocks. Please help me. Yo, I'd love to help you. Most people like sell a course book. I don't sell a course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I would watch some of my YouTube videos. Um, uh, let me get back to this and I'll answer that a little bit more. But look at the metrics right here about this app. This app I'm on right now, Moomoo, this is their stock. Look at their users. They have 26 million users. Client assets are at 106 billion. Average client assets. So anyway, cool app right here. No, if you want to get this app that I'm on right here, this is my favorite app for analysis. It's where I like to keep my cash as well. If you look in the middle of my screen, I got $1,000 of cash earning interest. You can get this app. It's called Moomoo here. I'll put a link in the chat if you want to get it. It's an affiliate link. So if you deposit like $100, we'll both get some free stocks. So that's cool. So yeah, hey, if you're new as featured, I like this brokerage right here. Obviously, you got to do your own research and be careful. Don't listen to me. I'm not an expert. You could lose a lot of money on a stock like I did right here. Like, look, I recommend if you like really find a stock you love, you should DCA into it, dollar cost average, but make sure you're dollar cost averaging into a high quality company. Or like, because look at this, I thought this one was quality, but then the stock just, keeps on going lower. It's at an all-time low right now. They actually lost a contract with Microsoft Bing. So, yeah. Anyway, let's see. Thoughts on MU? Yeah, if you guys got any stocks you want me to look at, let me know. Yeah, as future. Yeah, I have a bunch of tutorials on how to use this app as well on my YouTube channel. If you want to learn how to use it, I make it so simple if you want to check it out. But so here's Micron Technology. This is an NVIDIA competitor, and I love this stock right here. So check this out. If we look at this company's compute and networking revenue, and this is 56% of the business, so over half the revenue is from their computer networking. Look at the growth of this business. It is up 108% from the previous year. So it has literally doubled. And, that's 56% of the revenue. And look at their next biggest segment of business, the storage business. It's up 53% from year over year. So anyway, incredible growth company, and not just the revenue, because the revenue is up the revenue is up a crazy 38% year over year. And look at the net income. They're now making net income every single quarter. That's great news for Micron, because if we zoom out right here, look at this. This is the bad news. They used to lose a lot of net income every quarter. They were losing like $1 to $2 billion in net income a quarter, and now they're profitable. So that's great news for Micron. We can also see the dividend. You get a small but growing dividend here, a 0.4% dividend. So Micron, they're like an NVIDIA competitor. I do like them just because the growth there. They have really nice growth. I think they will have a good earnings report. Oh, when did they report earnings? We can also see what reports earnings this week. We'll check out the earnings hub. I don't think anything too popular reports this week. Yeah, nothing. No popular. Smith & Wesson, Kroger, Olive Garden reports earnings. Yeah, y'all want to see Olive Garden stock? Yo, check out this one right here. This is Darden Restaurants right here. So, and they own Red Lobster as well. Look at this right here. This app is telling me, what is this right here? A bullish continuation triangle, and the rise probability is a 95% chance. Anyway, actually, that's really impressive. Wow, Olive Garden stock's at an all-time high. Let me check out this. Is that right? See, look at that. 42% of the revenue is from Olive Garden. Then they have Longhorn Steak. Oh, I didn't mean Red Lobster. I meant Longhorn Steakhouse. Other businesses, fine dining restaurants. Anyway, apparently Olive Garden stock is at an all-time high. What is the dividend? A 2.5% dividend, even if you buy this stock at all-time highs. That's a higher yield than McDonald's does. And they're making a lot of money. They're making $300 million in net income a quarter. I forgot about this company. I'm going to add them to my watch list. I forgot about Darden Restaurants. So they report earnings this week. I guess that'll be interesting. My favorite stock is actually, I wonder if they have like the same business model as McDonald's. McDonald's, this is really a royalty and real estate company. If you go spend $100 at any McDonald's, $4 of that goes back to the corporate, this stock right here as a royalty. They take a 4% royalty of every sale. So they have a high margin royalty, and they own the land under every McDonald's, and they charge every franchise rent. So they're really a real estate royalty company. They'd be in the top 10 largest REITs if they converted to one. And look at this in 2008. McDonald's is also recession resistant actually. Whenever in 2008, when we had the recession, the stock didn't even dip because their sales actually go up. People go to McDonald's more in a recession, and McDonald's was able to acquire a bunch of land for super cheap. It was genius. And I get a dividend from them. Check this out. Because I own 13 shares of the company, I'm getting a little $23 dividend from McDonald's. So, and the stock price appreciation, I'm up 10%. But yeah, Here's my dividend growth portfolio. Here's my total percent change in every stock in here. We are up on every company, thank goodness. Meta, Google, these are, they pay dividends. Like we have a dividend coming in from Google. It's so tiny, a $3.99 dividend from Google. I get it. It's nothing, but I'm mainly buying these companies for the stock price appreciation. And in literally 5 to 10 years from now, in 10 years, Google's going to be paying me like $20 a quarter. They're going to be paying me a lot more because they're going to grow their dividend. They're able to. Oh, yeah. And we have a Roth IRA as well. A Roth IRA is just a tax-free retirement account. What's cool about the Roth IRA is that you can use it as a first-time house payment, down payment, if you're a first-time house buyer. Because normally you can't withdraw the money until you're 55, but you can actually touch it if you haven't bought a house yet. So anyway, that's what I like about the Roth IRA. And it's tax-free. You double your money on a stock. It's all tax-free in the Roth IRA, which is pretty cool. So I wanted to go back over here. Yeah, we were looking at Futu stock right here. That was one of my more recent purchases as well. Yeah, we bought T-Mobile, Futu, and actually one of my more recent, I literally bought this company. I'm up 164% on this company. I literally bought them not that long ago in April. Literally, yeah, April, what was this? April 4th, I bought Dave, and they're doing great so far. They did, except for this right here, they did fall 12% on the most recent day. That was because of Visa and MasterCard. They both fell like crazy, and they just followed the trend on there. But yeah, this has been one of my best performers. Actually, I think they're going to keep on going up as well. They're a $200 stock, and look at the sales right here. I mean, the sales hit a new record every quarter, and the free cash flow is the best part, actually. They made $3.40 of free cash flow per share. So this company, if you buy this stock right now, you will get the free cash flow yield's like a 6% on this company. You should get 6% of your money back. You know what? I'll even double check this. You get 6% of your money back just in free cash flow a year. Let me actually check the statistics here. Free cash flow yields a 5.4%. I wonder if I can show this. I'm on my desktop right now. Look at that. They have a 5.5% free cash flow yield. So anyway, Dave's a really cool company. You can withdraw any contributions, only earnings are penalty. Oh, okay. So yeah, I guess if you deposit like, let's say $1,000, you're able to withdraw $1,000 tax-free since you contributed that. Oh, that makes sense. In my Roth IRA, I own, this is a really cool stock right here. If you like dividends, this is a BDC right here, a business development company, and literally by law, they have to pay out they have to pay out 90% of their taxable income in the form of a dividend. So this high dividend yield that they have is actually totally sustainable. So if I go to type in Main Street Capital right here, this one pays me a monthly dividend, which is pretty cool. So, and they even make so much money that they sometimes pay you twice in 1 month. So they just paid 25 cents. They pay you 25 cents every month. But look at this month right here. They made so much money, they decided to pay you an extra 30 cents just because they made so much money. So their quarterly dividend costs 75 cents. And look at that. They're making over $1 every single quarter. They can easily afford the dividend. It costs 75 cents. They're making $1.20 a quarter. So easily a sustainable dividend on this company. That's how they can afford those special dividends. And you get a 5.3% dividend yield on top of the nice stock price appreciation. So I think it's a cool stock for my Roth IRA. Because normally if I own the stock in a taxable account, it would be taxed at short-term capital gains, and I would have to pay a higher tax on it. And in my Roth IRA, it's tax-free, which is pretty cool. Let's see. Oil's up 3.3%. That's crazy. Wait, is anything up in here? Yeah, the market is slightly green. Yeah, AMD is almost up 1% now. It's saying Zoom's up 2%. Robinhood's up 1.5%. Let me check that real quick. Robinhood is actually my best performing stock. I'm up 400% on them. It's crazy. Yeah, hey, I'm surprised. The internet's been doing a little better. I'm actually about to end the stream here. I appreciate y'all. Yeah, look at this sudden rally on Robinhood. You know what? I'm going to predict. I bet Bitcoin's going up as well. We'll go check them out. Let's go see here. Yeah, I agree. Crazy how markets are agreeing with all the geopolitical stuff. Oh, but no, I guess Bitcoin's not rallying. So I do wonder why Robinhood just randomly ran up there. Because Robinhood stock usually follows whatever Bitcoin does. Because Robinhood, like half of their revenue comes from their crypto transaction fees. And so I'll show you where I was buying Robinhood. So obviously I'm up 400% on them. I took a lot of gains. But guess where I bought them? So here's where they IPO'd. They IPO'd in 2021. I bought them right as they IPO'd. Look at this. Here's where I was buying Robinhood. Literally in 2021. It was so long ago. I don't even remember it basically. So I bought them in 2021. All I had to do was wait 3 years, and finally I was green on my position. And I was red for so long, I had to take profits. I took profits at $36. They're at like $60 now. So I definitely did not time that one too fortunately. But yeah, Robinhood's a cool one. And another stock I really like right now is Reddit. I think Reddit is really underrated just as a financials play. Like Reddit stock, ignore the name Reddit, for example. Like, let's judge them as if this was some random company. So the revenue is up 61% year over year. So they've seen some very nice revenue growth, and they're net income positive now. They're making net income every quarter, which is great news. And they have no debt whatsoever. This is incredible. This is an incredible balance sheet. They have no debt whatsoever. Actually, if you go to the cash, $2 billion of cash. Nope. Okay. Sorry. There we go. So $2 billion of cash on hand right now. It's crazy. So, and the whole company is worth 21 billion. So literally 10% of this company's market cap, just cash on hand. I was red on Bitcoin for 3 years too. Yeah, dude. Robinhood and Bitcoin pretty much follow the same thing. So anyway, that was the stream. I hope y'all have a great rest of your Sunday. Yeah, happy Father's Day. Hope you had a good day. Good luck. The market should be green next week or tomorrow. That's what the overnight market's indicating right now. Qs are up 0.2, SPY's up 0.1. So yeah, I hope you have a great rest of your night. See you later, ? If you want to support me, make sure to hit the subscribe button. I'm going to go live every Sunday at this exact same time. So if you'll be here, I try to go live every day during the week as well, but I'm for sure stream on every Sunday, and I try to do like stocks to buy next week. So yeah, anyway, hope you all have a great rest of your day. See you later.